This interview is for information only and should not be considered as investment advice or a recommendation to buy shares in the company featured. Welcome to this Stock Box interview. Well, hello and welcome back, of course, to the Research Talks here with Alan Green from Stockbox. Alan, how have you doing? How's your week been?
It's been good, actually, Mark. I have to say, after a typical start to the year on a personal level, although we've seen some difficulties, we were obviously talking about some of the stocks and the way they've been hit just now. But touch wood, at the moment, my portfolio is looking reasonably buoyant. So
Okay.
we've seen some price advances, and certainly, one of the companies I'm going to talk about in a minute, that's having a really good run. I think it'll continue to prosper this year, but of course, there are so many variables in the mix. But I think the start of the Trump administration has given the markets a bit of a lift. Particularly, of course, if you have an operation in Greenland, but that's another story.
Well, indeed, Greenland, of course, being a big political topic at the moment. But yeah, I mean, I think it's generally started a bit more optimistic, I would say. Although, as you mentioned, we can still see some heavily discounted placings going on with the miners here. Again, as we've said a number of times before, it's pretty dire if you're struggling there. I've seen it not so bad ever really in my time doing this. So again, when you start to see, I mean, it was Mike Whitlow at Ether Minerals that said to me back in the summer, he said, mate, you've seen nothing. When you start seeing 50, 60, 70% discounted placings, then you know the bottom's in. And we're getting close to that now if we're not there already.
Mark, I guarantee if we went back a year, and looked at one of the podcasts that we recorded a year ago, we'd probably been saying similar things. The bottom's near now, but it just shows that I think investors have to take a long-term view. You've got to be resilient, and but when these markets turn, when there is an upswing, and all of the ingredients are in place. We've got China cornering the mineral resources market. So you've got Trump looking at Greenland. Obviously wants to sort of come to an agreement with the residents of Greenland who want to remain firmly Danish, which is you can understand, and of course securing mineral resources for the new clean energy economy is vital. So so companies that have those assets, and those assets are developed and also are of a scale where, if there is, as we were saying earlier, a shift in the commodity price, the size of the asset, or the development of the asset is at a point where the shift in the commodity price doesn't impact too much on the actual value of the operation, and that's key. I think if you're looking for sort of companies to invest in now.
Yeah, indeed. We're going to talk about a couple of companies, of course, as normal. The Sovereign Metals, of course, who are in a much stronger position than a lot of other companies. And then Rome Resources as well, who do have a great project, but, they've still got to really see that market recognition, I think, in their value there. But Sovereign Metals first, Alan.
Okay, so these are two companies, and I'll cover why Rome is I believe is in a similar, albeit earlier position than Sovereign shortly. But Sovereign Metals, of course, owns the Kasia project in Malawi, and Malawi is known as the warm heart of Africa. It's got a very positive and supportive a government for projects like this, and indeed the management team at Sovereign have been on the ground and working very closely with the government. And indeed, a few years ago, one of the government ministers at the UN conference talked about the Kasia project and how vital it was going to be for the future of the country. And certainly, Sovereign have taken steps over the past few years to develop and de-risk the project. And we about a week ago, the company released an updated PFS, which I'm just going to talk to in a second. But the project is all about rutile. And rutile has a multitude of applications, and of course, it's used in optics. It's known as titanium paint, the brilliant white paint, and the paint that's painted on these huge wind farms, offshore wind farms. The actual generations themselves are painted with this protective paint, and it has applications in optics and welding and an absolute multitude of stuff. And then you've got the graphite, and you've got a vast resource here. You've got 1.8 billion tons of 1% rutile and 1.4% graphite. So it's 24.4 million tons of graphite, 17.9 million tons of rutile. And it's by far the biggest rutile project in the world. It dwarfs the next nearest one, which of course is Sierra Rutile in Sierra Leone. And uh, as the project has been developed, the past year has seen Sovereign dig a huge test pit to test the process of mining for rutile and graphite, and the graphite through tests over the past years, the graphite's been confirmed to produce outstanding anode materials suitable for battery production and also for traditional uses such as the production of refractory materials and so on. The links to the project are excellent. Infrastructure, sealed roads, a high quality rail line connecting to the deep water port of Nacala on the Indian Ocean, and also hydro-sourced grid power as well. So the updated PFS results that were completed last week are significant because about 2 years ago, Rio Tinto took a great interest in Sovereign and indeed invested into the company. It now holds 19.9% of the company. It's invested $59 million in total. And Rio has also been involved at every level with the latest PFS, the optimized PFS results. So it's had full oversight from the Sovereign Rio Tinto technical committee. I remember what I said at the start about de-risking the project. This has been crucial in getting the project to the point where it's at now. So we now have a net present value of 2.3 billion US dollars. Total revenues expected to be generated are 16.4 billion. Operating costs $423 per ton, and this is when you sort of look at the costs or what both rutile and graphite are selling for per ton. That's a pretty sort of in fact, it's the lowest operating cost of any project like this in the world. So it's the largest and lowest cost strategic critical minerals producer at this point in time. And but the important thing is that with the Rio oversight, the accuracy has hugely increased from the last PFS. So the numbers are absolutely spot on now. And if you look at the share price chart, you'll see that the share price over the past year has built up. So in April last year, we were looking at 23.5p. We've seen highs of 43.8p on the year, currently trading at 38.1p. And a number of publications have picked up the value in sovereign metals, believing it to be, in some cases, the next Fortescue Metals, and it could multi-bag from this point, and that's great to hear. And obviously, we fully expect the company to push on and deliver. But I think the most telling and what I refer to as a cold towel note was published by SCP Equity Research, who said the updated PFS is a significant success because it's incorporated meaningful design changes to the operation of the plants. For example, the company is not going to buy its own plant; it's going to hire plant and bring plant in, and the process has been very much streamlined compared to the earlier iteration of the PFS. So whilst the SEP's key fiscal parameters are unchanged, based on a $1,400 per ton rutile price and a $1,200 per ton graphite price. The company maintains a price target of 1.65 Australian dollars per share, which equates to 86 pence per share, and this is based on the existing cost, but the sheer scale, as I said, of this project means that if there is a shift in the commodity price down, obviously up is better still, but if the commodity prices fall, the scale of the operation, the size of the operation means it can easily absorb that. And obviously, in the background, we've got the prospect of Rio Tinto perhaps making a move. Will Rio Tinto make a bid for the company? So the shares are currently trading 39p. SCP's price target is 86p, which would be great. So if the commodity prices increase, that will rise, of course. And additionally, now we're embarking on the DFS, and this is the work that Sovereign will be doing this year. They'll be sort of advancing towards a DFS phase. Once that's in place, will that push the price target higher still? If Rio has aspirations to actually buy the project, I would expect them to make a move before that happens. But of course, they may just be content to sit back as shareholders and then sell out further down the road. Either way, yeah, I think the project has been de-risked as much as it can be now, and I think at this current level, 39p, against that price target of 86p, remembering other pundits and other investment houses have higher price targets than that, I think this company still offers great value and potentially could multi-bag from this point.
Well, multi-bag. So the target was 86, was it, Alan?
86p, yeah.
86, yeah. So double effectively from where it is now.
Yeah, it could double from where it is now,
Yeah.
but some other investment houses have been far more bullish, and they've got price targets,
Okay.
up sort of £2 to £3, But I
Okay.
think it would be irresponsible to look at those. But I think SCP have produced a very solid note. And indeed, if you go onto the Sovereign Metals page on the Brand UK website, you can read that SCP equity note. You'll see that featured on the Sovereign Metals page.
Okay. And I mean, in terms of sort of, they are quite advanced, aren't they, with building up the test pit here? I mean, what are the next key milestones that could propel the share price, do you think?
Well, as the project advances, the PFS was overseen by Rio, so it's now fully optimized. So yeah, you've got a multinational conglomerate like Rio overseeing this process. The next phase, of course, is to move on to DFS. Now, all the way through this, the Rio and Sovereign Technical Committee have also overseen the ESG and the ESG commitments that the company has, of course, to the community, both in across country in Malawi, but also the long way, close to where the project is, and the company's brought in sustainable farming methods. They're helping farmers grow maize in a sustainable way. Also, the water requirements for a project like this are huge. So there are hydroelectric power generators in place. There's the water supply, obviously will be used to power the project, but then again, that water supply will also supply the town of Lilongwe, and the scale of the operation there is enormous, and I think everything is now in place. The work has been done. The project has been de-risked. We then come on to the DFS phase now, and we then move to the point where the asset will start to produce. Now, how long away that will be, we don't know, but my guess is, I think, under the stewardship and the oversight of the Rio Sovereign Technical Committee, that won't take too long. But
Mm.
we're going to see a lot of progress in the company this year. Any shift in the underlying commodity price will that may have a minor impact on the share price, of course, if the commodity drops in value. But I don't expect to see too much of a fall either on the rutile front or the graphite front.
Okay.
But again, any shift may also trigger interest and a potential bid for the remaining share capital from Rio Tinto. And of course, what level that takes place, we don't know. But bear in mind the SCP price target of 86p, and that's probably where fair value is right now. And of course, that just takes into account the fact that the company's reached the end of the PFS process. We're
Mm.
not at the end of the DFS process yet, and we're not in production. So, how much higher will it be at that point?
Indeed. Okay, well, thank you, Alan. Let's move on and talk about Rome Resources then.
So Rome Resources, this is a relatively new company, really. Although the management team have been operating in the DRC for 25 years now, and
Mm.
of course, the Rome owns the Baisi North tin project, where there are significant resources, and of course, it's sited close to the Alpha Tin project, which the management team are involved in bringing to market, and of course that's been hugely successful. Baisi is only 8 kilometers from Alpha Men, and the Rome management team and the management on the ground there have developed Alpha Men. So of course they're now undertaking the same process. At with the Baisi North project, and of course the board, overseen by Paul Barrett, have developed and de-risked the project over the past 6 months. But things have really started to happen. At the end of last year. But whilst we saw the share price high of 0.50p last year, we're now currently trading at half of that. Which is a real head scratcher, I think, because of course tin demand is well established. It's a key part of the new clean energy and also the technology, the development of technology, AI, printed circuit boards, all the rest of it. It's a key part of that. So in November last year, we heard from the company that the two key prospects that the company are drilling, which is the Calais prospect and also the Mount Agoma prospect, which are the two prospects at the Baisi Tin project. The company noted significant tin hits in November. Two holes there, hole 5 and 6, 0.6 meters at just over 4% tin, from 87 meters down. Hole oh 06 was 6.5 meters at just over 1% tin. And two other holes, hole 9 and hole 16, visible tin mineralization was noted from surface to depth. At Mount Agoma, holes 16 and 17 noted visual tin and copper as intersected in two of the southernmost holes that were drilled at the prospects. So in December, really the value in the company, I think, was very much benchmarked when the company announced a strategic investment from Stanvik Mining, and the Stanvik Mining invested 4.2 million, and that involved the issue of 1.2 billion shares issued at 0.35p. So here we are today, 0.25p, well below the level at which the company invested, and that's a real head scratcher for me, because for a company, so Rome Resources has a market cap of 17 million currently. Now, with 4.2 million now in the bank to fund the exploration, to fast track the development of the Baisi North project, that to me is a bit of a head scratcher. But nonetheless, it is where it is. So we have lab results announced in a few weeks ago, and from that drilling and at Mount Agoma, 1,657 meters of drilling reported back and confirmed the initial findings. 3 meters then hole 16 of 0.27% tin from 46.5 meters down. Um, total width total width of 38.4 meters of tin mineralization noted from that hole. Similar numbers from hole 17, a total width of 32.1 meters of tin mineralization across those holes. And Paul Barrett made a comment, which I think is very significant. So, for those looking for comparatives, the asset there aligns with the copper and tin mineralization recorded at the San Rafael project in Peru. More than 200 meters of confirmed sulfide mineralization. So that's very much a benchmark again in terms of the value there. Then we had further mineralization reported. Continuity of mineralization reported at the Calais prospect, hole 9, 5.5 meters at 0.89% tin from 102 meters down, 0.9 meters of 1.28% tin at hole 10, and hole 14, 2.85 meters at 0.45% tin, and also copper and zinc readings there as well. So possibly one reason that the share price has come off a bit is that there was some unrest reported in Goma, and the company issued a statement to confirm and reassure investors that the operations and on-site activities were unaffected by the developments in the city of Goma. But the company has, as a precaution, relocated its field operations to Bukavu, which is approximately 200 kilometers away. But the progress continues as before. There's been no delay in that process. So I think the share price has come off for that reason, and I think investors now have an opportunity to get into this project as it develops, backed by that big investment from Stanvik Mining. But there's an opportunity to pick up the stock well below the point at which Stanvik Mining invested. Of course, Stanvik invested at 0.35p. Shares are currently 0.25p, and we've had that reassurance from the company. So this marks, I think, a good entry point and a great opportunity, because looking at the history since the reverse takeover was completed, the share price is now as low as it's ever been since that point. So I think it marks a great entry opportunity at this juncture in time.
Okay, good. Well, thank you, Alan. It's interesting to hear perhaps some thoughts as to why the share price has come off due to some of that unrest in the area there. But I mean, the team have got a lot of experience there. It is challenging if you don't know what you're doing, but as I understand, they've done it before quite successfully. Yeah. And Alphamin, of course, the largest tin project in the world, tin producer in the world, are operating pretty successfully. So, yeah, if you know what you're doing, you can get around the unrest. But yeah, maybe it's just again a sort of just a factor of where we are in the markets. When we're still seeing a lot of very low valuations, but as we said before, some of the big guys are moving in. Premier Might, and I've seen them again very active in the market in some of the junior miners who are very, very undervalued. So when it feels like swallowing broken glass, it's the time to put your money out.
Or as Warren Buffett said, buy when there's blood on the streets.
Exactly, and that certainly seems
although
to be.
perhaps that's not the right analogy to use in this situation, because of course there is civil unrest in Goma. So let's hope it doesn't come to that. But no, that's the thing. The team at Rome have been operating in the DRC for 25 years. They developed the Alphamin project. They've seen it all before, and they're used to operating in a regime that perhaps from time to time throws up challenges, as we're seeing in Goma. But
indeed. Well, thank you, Alan. Thank you very much for your time, as always, and we'll speak again next week.
Thanks, Mark. Speak next week.
Well, here joining us again on the Research Talks, Dan Flynn. Hello, Dan. How are you doing?
Hi, Mark. Thanks for having me on again. How are you doing?
No, very good. Good to be speaking to you. I'm doing pretty well. Thank you very much for your time, as always. Today, you're going to talk to us about Cykel AI, of course, who are an AI company who moved over to the London Stock Exchange just recently from Aquis there. And didn't have much of attention going on, really, but they have been on Stockbox a few times, an AI play, who were sort of finding their feet really in the space. But they've had some significant news this week, and of course, the share price reacting very nicely to that. At one point, it was up, I think, over 50%. It's come back a little bit off there since then, but still trading higher on the week than it was. So, yeah, take us through what you've researched with Cykel AI.
Yeah, absolutely. Thanks for that, Mark. So Cycle is one of the growing number of AI-focused companies that are listed in London. And like many of them, it does a lot of things that sound a bit out there today, but will probably be par for the course in the future. So specifically, Cycle focuses on the use of AI in the workplace. Last year, it launched its workflows platform, which is already used by hundreds of customers. It automates a wide range of like tasks and processes, saving costs and time on the way, maximizing productivity and growth. And more recently, it's launched a suite of tools focused specifically on automating the recruitment process for companies. It's even started putting faces to this work with interactable digital workers with human avatars called Lucy, Eve, and Samson, who you can see on their website if you want to check that out.
Okay.
They're pretty convincing. So the reason I'm talking about Cycle today is this week the company announced the integration of DeepSeek R1 across its digital worker platform.
Mm-hmm.
So you probably recognize by now the name DeepSeek. It's the Chinese AI firm that rocks markets this week with the launch of its R1 AI model. The company claims that R1 outperforms Western peers like OpenAI at a fraction of the cost of operation. And these assertions have raised concerns around the enormous sums tech firms have been spending on AI. And as a result, it's had a large negative impact on big tech valuations. Most notably, obviously, we saw Nvidia's valuation fall by 589 billion in a day, which is the biggest ever daily decline in market cap on record. So returning to Cycle, and the key point in this announcement is the claim that integrating DeepSeek's R1 model will reduce its infrastructure costs by up to 96%. So put another way, the company said R1's model rate is just 4% of its competitors while matching or exceeding their performance, which is, like I just said, that's at the crux of the discussion around R1 generally. So this saving sounds extremely significant for Cycle. It's hard. It's kind of like you said. It's quite a new company, so it's kind of hard to get a handle on what its infrastructure costs really are and what they totally stand. Its last results cover the 6-month period ended 30th June 24, but the reverse takeover only started on the 27th of June. So we'll be getting more figures about its profitability and costs soon, which
Okay.
will be more up to date with its new projects and products. Sorry. What I'd say now, though, is if Cycle's business model is underpinned by the provision of AI products and services, and the cost of developing and improving those is dropped by such a large amount, then if you put aside any other costs and funding issues for the company at the moment, then surely that has to be good for its profitability from here.
I would say so, yeah, for sure. I mean, we're still waiting on to see exactly what their business model is, aren't we, and sort of their profitability.
Yeah. Yeah. But what was interesting, as you alluded to earlier, was that the company's share price hasn't gone up as much as you would maybe think on such significant news. Volume's been massive relative to Cycle's average for the last few months. And there's been a lot of buys, which you'd expect. Obviously, this news seems like an excellent time to enter the stock or top up your position if you believe in Cycle's leading role in such a rapidly emerging sector. But the buys have been met with a lot of sells. And, this could come down to people selling into the news as the volume spikes. It could be due to general uncertainty around AI. Although, as Cycle points out itself, it actually benefits from DeepSeek rather than being disrupted by it. Or it could be, I was thinking maybe it could be the assumption that if Cycle can integrate DeepSeek R1 so quickly and cut its costs by such a large amount, then maybe other companies that it's competing will as well. It's hard to tell. And you look at the bulletin boards, and a lot of people have their opinions about what's going on. What I do think, though, generally is as a new company in this space, Cycle could be well worth keeping an eye on. Before, I don't know if you agree, Mark, but you've got the feeling that some stocks have just put AI into their news to try and ride a bit of the
Mm.
speculative hype.
Mm-hmm.
But with Cycle, it seems, given it's focusing on a specific area of AI, there's a bit more meat on the bone. It's backed by a team with experience in the sector. It's already rolled its platform out to hundreds of clients. So this isn't a promise of something coming in the future. It's something that actually exists and being
Mm.
expanded upon. So the company currently trading with a market cap of 14.5 million, rolling out new products to clients, establishing a number of new partnerships, and actively scaling up and optimizing costs. It does seem to me like a good way to get exposure to the AI workplace automation theme if you believe in its potential.
Mm.
And that potential is nothing to be sniffed at. I was looking earlier, and a report by McKinsey sizes a long-term AI workplace opportunity at $4.4 trillion of added productivity growth, over the long term. That's need to tell you that's an enormous amount of
Mm.
untapped value. And if that is the case, and we start to see more and more adoption of AI among businesses globally from here, and if Cycle's results start to show increasing demand and increasing profit, the company shows increasing profitability, then the stock could quite quickly start to move onto the radar of a much larger pool of investors, and that'll be to the benefit of early movers. I mean, without question, the news this week has put it on more investors' radars. You go on LSE, and
Mm.
there's new chat posts every
Mm.
couple
When
of
it was very
minutes.
quiet before.
And today, when we're recording, yeah, there's 136 trades. That's 2 days after the news has come out. So
Mm.
so it's being put front and center, and it hasn't benefited the share price enormously yet, but give it a while, and who knows? AI is an interesting one in that sense, isn't it? It had that massive hype last year. Might have
Mm.
cooled a little bit, but it's not going anywhere. It doesn't seem to be anyway.
No, no, for sure not. And you're right. There are a lot of companies who have sort of jumped on the AI kind of bandwagon, if you like. Which nothing wrong with. It's
Mm,
something that really, when ChatGPT was launched, it's amazing actually how quickly we get used to these things. Because when ChatGPT really came out, people started using it maybe, I don't know, a year, 18 months ago. It was like, wow, this is
mm,
incredible. But now, like some of the things you thought were wow back then, you just do now as a normal course of daily life
mm,
and part of your daily work and using that platform. And I think we are just very, very much at the very start here of the curve, if you like, the adoption curve of AI. So again,
mm,
maybe with miners, you're going to have to give it a bit of patience. But one thing you'll get with AI and the tech is you're at the very start of that swing now. And when it starts to find its feet, starts to get some real um, application use that can actually be deployed and generate revenue, which is of course where Cycle are going down that route, then yeah, I mean you're going to catch some of that move up effectively, and given
mm.
of course the calls for increased productivity. Just today I saw something on the BBC about the UK needs to work far more effectively, and that's been the case for quite a while actually. And
Mm.
given the Trump administration coming in, and you'll definitely shake things up, hopefully for the better. And we hopefully see things like AI companies like Cycle getting established in a space and actually getting some meaningful revenue coming in from real use cases. So
Mm.
I think with Cycle, that deep seek news was very good. Obviously, the market liked that quite a lot. As you say, I think it sort of put it on the radar there. From what I'd picked up when they reversed into the shell, whatever it was, I forget the name right now. When they came on to
I've
the
forgotten
LSE,
as well.
it
Yeah.
was there was sort of not much. People weren't really that interested, but now you're getting more of the kind of AI interested tech people sort of looking at it, talking about it. So give it a bit of time. Ewan's away working in the background pretty hard, as I know. I speak to him semi-regularly here on Stockbox. So he does need to get out to the point where we can actually see some numbers, see some figures coming in. Of course, the business needs to ultimately make money. But, with its current share price where we are now at sort of 3p market cap of 14 million, it's not very much really. So I think there's some upside to be had in Cykel.
Definitely.
It'll probably happen quite quickly when it does.
Yeah, I agree. I think the company's next financials, and along with any news flow on the way, are the real thing to look out for. I think that could if we start to see that it's gaining traction and it's doing it cheaper, and it's gaining that traction at a much lower cost than its peers, then that's a clear opportunity, isn't it?
Indeed. Yeah, indeed. Okay. Well, thank you, Dan. Thank you very much
No
for your
problem.
time, as usual.
Cheers, Mark. Thanks for having me on.
We'll speak next week.
Yep, speak next week.
If you enjoyed this interview, then give us a thumbs up, a like or a retweet. Subscribe to us on YouTube or follow us on Twitter and hit that notification bell to be the first to know when we release new content. There's loads of great content on our website too, across all our programs at stockboxmedia.com. Thank you for watching.